Hello everyone, I hope you're enjoying your morning so far. This is Sage, live from Kalkine Studios here in Sydney, and you are watching the opening bell. While the US corporate season and key economic data are closely eyed by market participants, virus concerns continue to suppress the market momentum. Let us cast an eye over how the market charter is panning out today. Following the US peers overnight, Australian shares dipped at the market open today. While the IT sector seems to be the major dragger, the gold players raced higher during the early trade hours. The bottom performing stocks in this index are Flight Centre Travel Group Limited and NRW Holdings Limited. On Tuesday, the ASX 200 closed near the high of the day, up by 0.56% at 7,067.9. However, the net change for the last few sessions has been minimal as the market is consolidating in a tight congestion zone with contraction in volatility. The Reserve Bank of Australia, or RBA, left its key interest rates unchanged, near zero for a fifth straight meeting, and pledged to keep its policies super supportive for a prolonged period. The RBA upgraded the GDP growth scenario with growth of 4.75% expected over 2021 and 3.5% over 2022. Looking at the energy space, oil prices rose after more US states eased pandemic-related restrictions and the European Union sought to focus on tourism, though soaring COVID-19 cases in India capped gains. The Brent crude futures settled $1.32 US up at US $68.88 a barrel, while the WTI Crude futures rose $1.20 US to close at US $65.69 a barrel. It is to be seen whether oil companies such as Woodside Petroleum Limited, Oil Search Limited and Santos Limited continue their uptrend from yesterday. Gold fell almost 1% after the US Treasury Secretary Janet Yellen said interest rates may need to rise. The US gold futures last traded at $1,776 an ounce, falling 0.9%. The Australian gold miners might take a hit due to falling gold prices, and shares of Silver Lake Resources Limited, Newcrest Mining Limited and De Grey Mining Limited could be under the investors' radar. Moving on to the major newsmakers. The biggest newsmakers of the day comes from the Big Four bank Australia and New Zealand Banking Group Limited. The bank announced that its cash profits from continuing operations more than doubled to $3 billion Australian dollars in the half year ended 31st March 2021, compared with $1.4 billion Australian dollars a year ago. ANZ declared an interim dividend of 70 cents, more than doubling the interim dividend it paid last year. Then global packaging company Amcor has upgraded its earnings growth forecasts for financial year 2021. The company's GAAP net income for the quarter rose 58% to $684 million US. Moving on, the private health insurance provider Medibank Private Limited upgraded its growth outlook, saying it was hoping to achieve total policyholder growth of 3.5 to 4% for financial year 2021, as against earlier growth forecast in excess of 3%. Another news worth looking at is global manufacturer and marketer of commercial explosives and fertilisers Incitec Pivot subsidiary Incitec Fertilisers has signed a 20-year off-take agreement with Perdaman Chemicals and Fertilisers Pty Ltd. Plenti Group's warehouse funding facility for renewable energy and personal lending purposes has been increased to $200 million Australian dollars, up from $100 million Australian dollars. Then leading healthcare player Healius said its non-COVID revenue has grown during the second half of the financial year 2021. The company's pathology coronavirus testing reached 3 million total COVID tests during the March quarter. Besides, diversified funds management group Pengana Capital Group has awarded the management of 2 global equities strategies to Axiom investors. Moving on now to the cryptocurrency, Ethereum bolstered to another record peak of US $3,530 before paring gains to trade 1.9% lower. On the other hand, the largest cryptocurrency, Bitcoin, fell 4.66% to 54,553 US dollars. Let us now look at the US market performance overnight. That is closely tracked across the global markets. Wall Street pulled back from its record trading levels overnight, with the Nasdaq Composite declining 1.88%, dragged by the blue chip tech firms. The global indices dropped lower, with the US Treasury yields on Tuesday as low trading volume due to holidays in both China and Japan, a lull in economic news and lack of a catalyst to lift stocks higher sparked a sell-off by market participants on worries that further upsides in markets is limited amid high valuations. Besides, a recent surge in commodity prices helped spur talk of an inflation spike and bucked the downward shift in equity markets. The tech-heavy Nasdaq fell 1.88%, marking its biggest single-day decline in 6 weeks. Surprisingly, the yield on the 10-year US Treasury note fell to a low of 1.557%, a slide that normally would push technology shares higher. Signs that the US Fed remains in no rush to reel in its massive stimulus programs kept the 10-year US Treasury yield slightly under pressure. Also, investors sold the high-flying tech-related stocks that have doubled the value of the Nasdaq since March 2020 lows and bought government debt, pushing yields lower as well. The other two primary indices on Wall Street, the Dow Jones, closed almost flat with a slight uptick of 0.06%, while the S&P 500 was down by 0.67%. On Tuesday, US Treasury Secretary Janet Yellen said that she does not anticipate that inflation would be a problem for the US economy, as price increases during the recovery should be transitory. Speaking at an event, Yellen clarified earlier remarks that interest rates may need to rise modestly to prevent the economy from overheating. "It's not something I'm predicting or recommending," she said. And meanwhile, the latest data from the US Department of Commerce said the trade deficit in consumer goods and services during March widened 5.6%. Exports grew 6.6% to $200 billion, while imports rose 6.3% to US $274.5 billion. And moving on to the performance of the greenback. In the Forex markets, the US dollar reclaimed some ground to partially unwind April's long decline as investors squared up positions ahead of monthly payrolls data due on Friday this week. The dollar index rose 0.337%. Thanks for your time watching. That's all for now, but do stay tuned for more live updates on Kalkine TV across the economy, markets and diverse themes and sectors. Sage signing off for now.